Hey guys, how are we doing? It's Crypto Insight UK here, bringing you back another YouTube video. What we're going to just dive into today is a little bit from the BIS about central bank money, the future of monetary policy around the world, and the future of money in general. And we're going to look at some charts, just some things that I'm interested in. There's some very interesting TA that I think I found, or I've not necessarily found it, but just been digging through some TA and just some things that have really stood out to me. So I just want to show you those things, guys. Take from them what you will. It may help with deploying capital or not at the minute. So yeah, stick around, have a look. But we're going to first start with this. Put this tweet out earlier, so if you don't already follow me on Twitter, go and have a look over there. Also, obviously, guys, like his message. Drop a comment if you enjoyed the video and sub if you don't already. Put the notification bell on so you know when I make a new video. So I've said, could we be seeing a reversal in UK oil, which is the ticker? It's basically crude oil. This would be a step in the right direction for the taming of inflation. It's one of the factors that the CPI print that affects the CPI print in the US. If the CPI starts to decrease, we should see monetary policies cool off from the Fed. Eyes on. So this is one of the things oil that the Fed take into equation massively when they're looking into consumer price index or inflation. Basically, if it cools off, then the Fed won't have to be as strict with monetary policy if they don't want to be. So quantitative tightening may slow. It's not necessarily just based on oil at all, but it is one key ingredient in the basket of things that they take into consideration. So since I tweeted that was about 3 hours ago. About 50 minutes ago, it had a further 2% loss. Eyes on $104.44 for the next area of interest and a back test of this trend line. So this is a big indicator for CPI, Consumer Price Index, because it affects a lot of pricing in many different areas of like where consumers will spend money. So not just like fuel for cars, but also like transport for any kind of goods, because you've got to get it from place A to place B, construction of some materials, etc., etc. And a lot of the reason that this price is so high right now is because the supply chains were in question. Like obviously Russia, the third biggest oil producer in the world. People were just worried and like priced into the market that we may lose that like facilitator of oil. So definitely something to take into consideration. Not anything to get too excited about yet, but it is something to keep your eye on. It's better it's coming down than it's going up, in my opinion. That gives the Fed, or may give the Fed, if CPI comes down, some room to change their monetary policy. Right now, I've just got the chart open. We've retraced a tiny little bit, so we're at 108. But as I said, the next area of interest for me is 104. Now we're going to get on to the interesting stuff, guys. This is the stuff that I really think you're going to want to pay attention to. If you enjoy it, sweet, let me know in the comment section. But I've got the BLX chart open here, which is essentially it says the brave new coin liquid index for Bitcoin. It's basically the furthest back we can go in terms of info for Bitcoin. But we're just going to have a look at the retraces from all-time highs. So we're going to start back here in 2011. Our first retracement was about 90 odd percent. That's not quite at the top there. Our first retracement was 93.81% from the high set in June the 6th, 2011. And then we had like a secondary like mini high here, which I did include. I'm just going to put this on the daily actually to make it a bit more obvious where we're looking. Cool. See if I can find that. Where are we? Here. So we did have like a secondary mini top here with a big price crash in a real fast period of time, an 81% correction. And then we set a bottom and then started to rally up, came down, tested the 200 and banged out towards 2013. We set a top on the 1st of December or the 30th of November 2013 and had an 86% retrace to the bottom on the 15th of January 2015. Then again, we rallied all the way up from there, up to $20,000 from the bottom of $162. And then we came down for an 84% correction down to the $3,200 mark, and that was in December of 2018. We started to rally up, had the C19 crash, and boom, out we went to set the higher high, and then set a slightly higher high here in November 21. And so far we're down 74%. So let's see what the difference is in the correction so far. So we could say 93. If we just pretend this one isn't really a top, I don't know if you want to think that or not. We could say this was a run up, consolidation run up, because it didn't really run up very far, like percentage wise compared to the other run ups. But so you could say this is a mid-cycle correction. So we'll say 93%, then an 86, and then an 84, and then whatever now is going to be. We could suggest 84, we could suggest 86, but logically, as time has gone by, the corrections have been less. Yes, this was only 2% less than the correction before, but it's not out of the picture to say that a 10% less correction is possible. I don't see why from this date here and in 2011 to 2014 there's a 10% decrease in the depth of the retracement, and then I know only 2% here, but why could there not be another 10% decrease in the depth of the retracement in 2022? It makes sense for me. They are becoming shallower retracements. So could we have found the bottom? I am not 100% sure. I just want to show you a few other things as well. There was something that I looked at a minute ago in terms of, yeah, it was here and there. Yeah, I'm going to show you this. If you say that, let me just get rid of these boxes now, and I'll show you something similar on the XRP chart in a second. If you say this bottom, where does it find the bottom? Well, we don't know. Just above this retracement here is what I was looking at. This is the interesting area for me. Let me just get a little box in here because it's showing something quite similar right now. If I can find the drawing tool. Oh no, that's a rotated rectangle. That's not good, bro. We'll get the normal rectangle out. My bad. If you look here, it wicks into the zone, but if you can see, it doesn't. I'll put it like that so you can see there is a gap. It's hard to see, but there is a gap there. That's the gap. It's about a 10%-ish gap there is between the top of the wick of the retracement rally and the bottom of the market in the bottom of the next correction. So there's something to take into consideration. So if we look now, see if we can compare that price structure to where we are now. Let's have a quick look at this. Boom. And if we look here, it's quite hard to draw this in, guys, because I'm trying to make it accurate for you, but it's quite hard. So have a look here. Boom. We'll try and make this accurate, as I was saying. There and there. Perfect. And what's the price differences of this then? About $300, which is about only like a 2%, I think, if I'm doing my maths right there. Yeah, I think about 2% difference. But you can see that it's catching in the same sort of area, or has caught in that same sort of area right now. So that's my talk for Bitcoin. I know I've not really told you any bottoms or tops. Actually, do you know what? I'll go through a quick thought process on bottoms and tops right now, and just where to deploy capital. My discussion that I have with my friends, and that I think that is important for you guys to understand too, is that if you have no exposure to the market and you want exposure, and you're looking to hold for a longer period of time and aren't going to get worried about short-term price action, now's a great time to be buying. It really is. We could depreciate in value more. I'm never going to throw that out of the equation. Crypto, no one knows. But we also know that in the future, should this asset class be adopted, which is what we're all betting on, that's why we're even here to invest anyway, we're going to see massive growth from the area that we're in now. You're getting a huge discount on what anyone else has been buying for the last however many years, 2 years, let's say. Timing the bottom, you're never going to do. Not even the best traders in the world time the exact bottom. If you think that Raoul Pal has been saying that he thinks we could have a capitulation moment in the stock market, recession could be short and sharp. But then he talks about and says that he's been dollar cost averaging into tech stocks for the last 7 weeks, and this is about his last week of dollar cost averaging into tech stocks. So he's not even trying to find the bottom at all. He's just like, well, I'm happy to get exposure at these prices, let the bottom ride out, and then ride it back up to the upside. And that's the way that, in my opinion, like the market should be played. Even swing traders and day traders aren't going to time this bottom, guys, because the market is so immature. One piece of news can really shake us one way or another. So anyone with complete conviction that we're going lower or higher isn't someone who has done enough research into the wider economy, but also into charts in general. We only have, this goes all the way back to 2011. We only have 11 years of data that we can look into. So, and anything can happen in those years. Yeah, you can say this time's different. We haven't been in a recession. So do we know if that's going to mean that it's positive or negative for the crypto price action? The way that I'm playing the market personally is I have a tiny bit of capital left that I'm going to deploy if we come exceedingly lower, like into this sort of range for Bitcoin. But other than that, I'm probably just going to sit on the sidelines because I'm massively deployed. I'm not going to buy Bitcoin anyway. And we're going to get onto XRP now. So the first thing I want to just point out for you guys is this. There is a wick here, which I'm going to show you as soon as I've taken this box off. In the space of 174 days, XRP went from 12 cents to $3.85 with a 3,139% increase in price. If we did something similar to that now, where would that take us? 3,139. We'll just say there. Oh, that's 31,000. Jeez, my bad. I was going to say that's not right. Because it's around $10 what I was thinking, and that was up to 100. LOL. 3,000. There you go. That'll do ish. It would take us up to $10. So there's nothing to say. Using history, there is nothing to say why we cannot hit within half a year $10. It's just people's thought processes and emotions that say that we can't. Price action actually tells us that history shows that we can do something like that. So I was also looking to try and find a bottom on XRP at how different structures have played out in the past. So what seems to happen is you have a run up in price, then you have a capitulation, and then you set your low and sometimes double tap a secondary low, which is what we saw back in June, July of 2021. But this isn't June, July 21. This is in 14. I'll show you what I was talking about there. So I was talking about here, look, June, July. So you come and you set your low in June, and then you set your secondary low, and you go for a next rally. That's where I was just comparing it to. But you come and set yourself a low, and then you have a little rally out of there, and then you have a sideways downwards accumulation, but you don't come and set a new low, and then you push out, and then you come down again. But again, guys, you don't come and set a lower low than what you set before the first rally. So then we have, again, loads of accumulation, guys. Up, down, up, down, up, down, up, down. And then we push out of this zone. Accumulation, push out, set the low. Accumulate again. Higher low. Potentially higher low. I don't even know if that's higher low there or not. Slightly higher low here. And accumulate, break out. And then we come down, we set our lows. This is our low for this cycle. It's matched the low of the previous cycle. And this is accumulation for me, guys. It's all accumulation. Like if this could be compared to this, I'd say that they're pretty similar. Obviously, it's an extended time period. Big volatility in price action. But then this is the thing that I wanted to show you and talk about. Right now, we've seemed to have caught our low on the same sort of areas we were talking about back here. You know, for Bitcoin, how I was saying, like you have the rally, you have the retracement rally, and you're basically holding just above that price. Here, look, we have actually wicked into it. So we are in this price range here. But we look to have caught that, guys. We look to have caught it as our low, to be honest. 29 cents as a low is where we had resistance back here in August of 2017. Caught on the top of the resistance, using that as support. It's a very strong argument to say this could be the low for XRP. There's also this is on the logarithmic, so I'm going to have to change it to the standard just so I can show you. Let's just get that in there. Let me just quickly show you. It's just on logarithmic it was before, just to make it easier. Boom. Boom. So there's a confluence that this could potentially be the low. A third one, or a third confluence, was when we're in this descending triangle pattern here. We'll just quickly draw in what I was seeing. If we just remove that wick, just say we're having a pattern like that. We had a breakdown target of this, if we can find that now, which was met. Look, another third confluence for the fact that this could be potentially the low for XRP. Obviously, nothing's out of the question. We haven't seen big volume come in, which is what I would like to see. But there's some things that I've had like on my mind. I just like to share with what I think with you guys, as well as massively depreciating price action and the RSI being in the absolute floor. So one of my friends at the minute has come into some capital. He's got paid from his job and he's looking when to buy the next batch of XRP, and he's saying he's waiting for a lower price, which is completely fair. If that, I'm never one to tell someone whether to or not invest into any crypto at all. I just show my opinion. We're holding a very strong level of support here, guys. If we look at the amount of times that XRP has dipped and rejected this price level that we're at, let me find that rectangle again. I'm not very good at finding that, am I? So if we go here, like for example, look at the amount of candles that are in and around this area of interest here. Flipping loads. This is on the weekly. We've got, I might not even count it, but I would say 30 plus weekly candles that have like struggled to break in or out of this zone. Let's go up a little bit just so I can show you. But it shows you this is a strong area of interest for XRP. If we can get this weekly candle close back up above 32 cent, guys, I think we're looking strong for a bottoming area here. Doesn't mean it won't be this week, doesn't mean it will be next week, but I think there's an argument to say that this could be a bottom. I really, really do. And yeah, with that, that's the last bit of TA sort of that I wanted to show you. I know it's not really in depth, it's just sort of me talking about my thoughts. I just wanted to show you exactly what I was thinking. In regards to the wider market, as we talked about with oil, I think there's an argument to say that everything the Fed looks at are lagging indicators. We could see price action reverse in the markets. I know there's a lot to do with the economy that I haven't talked about, like the Bank of Japan is basically losing faith. The treasury yields have run rampant, so there's something to suggest that it's going to break in the Bank of Japan. The wider economies in general are looking pretty messed up. And they are affecting crypto because we're acting like a risk-on asset at the minute because the amount of institutions treating crypto like an equity basically. But we don't have any proof that crypto is going to act the same way as stocks, and we can only use the previous price action that we've got to project TA for the future for crypto. So that's basically what I'm doing there. And regarding the wider markets, we may see some leading indicators now that might lead the Fed to change their monetary policy. Doesn't mean that the economy is getting better, because I don't think that's the truth, but it may mean that the Fed have some scope to not act as hawkish. And as soon as you start to see that, like you start to see the Fed maybe backtrack on some of their tightening or increase interest rates by lesser percentages, when we'll start to see a rally. But what you've got to imagine is after that, like when that information comes out, the bottom will be previous to that. So the bottom will have already come in, because as soon as people hear that, they'll start to then buy. So that means that the bottom's going to be before that. So that means the bottom's probably close if that's going to come in the next month or two, which we don't know, but I'm presuming, just going off oil here. So this is one tiny little aspect that they take into consideration. But that suggests to me, if oil continues with its trend, its current trend from the last week, the bottom could be in and around now. It really could be. The other side of the coin is that we could see further liquidations and capitulations in the crypto market. We've seen Celsius. We still haven't got confirmation whether that's going to liquidate. Obviously, UST, Three Arrows Capital. But I saw some positive information yesterday that Sam Bankman-Fried from FTX has actually bailed out BlockFi or given them $250 million of liquidity that they can tap into and use at any time to stabilize their maybe their margins if they're on a margin call, or add some more collateral. So he also has been tweeting and replying to tweets as blockchain backer said, implying that he's been saving companies in the market. So maybe we do, maybe we don't see a further liquidation. I've heard rumors that we could see a big exchange get liquidated. Rumors are just rumors for now, guys. And there's always been Tetherford, but today Tether have launched a Great British Pound stablecoin, or are going to launch a Great British Pound stablecoin. If you haven't seen that, go and check it out on Twitter. So there are all the things to take into consideration at the minute. So this is why, guys, it's impossible to say whether we've bottomed or not. But it's good to get some capital in the market because there's potential we have. So you don't want to be sitting there. This is the final thing I'm going to leave you with here because I feel like I've just been rambling. You don't want to be sitting there with stablecoin in the bank if crypto starts to rally. Because let's say this is a potential scenario, yeah? I'll give you the two options. You buy now, and we could come down further with XRP. Whereas the absolute bottom could be, what, 12 cent? And, like, if we get to 12 cent, I'm a blooming mortgage a house and buy. But let's say we do. Let's say we do. Worst case, Tether collapses and we get down to what, 12 cent. It's a 66% drop there. And what's the upside potential? Even to all-time highs, which I think will break quite easily. The only reason people don't think we will is because they're just emotional at the minute. But you're looking at a 66% downturn for a 10x on the upside. So you could lose, that's like you could lose half your money or you could gain 10 times. So if you flipped a coin and it gave you heads or tails, tails gave you a 10x and heads gave you minus 50% of the money you put in the first place, would you take that flip? I personally would. That's why I've been deploying. I've been deploying even since here, guys, all the way down, buying. Because as we get offered lower prices, I'll just take more. Thank you very much. And obviously, best case scenario, we come up to the $12 to $13, $12 to $15 range. If we get that, we're looking like a 30x. So that would be like flipping your coin now for a half a percentage, a 50% downturn or a 60% downturn, or a 3,900% upturn. And even if you do come down, guys, like if you just hodl it out for a longer period of time, you've got the potential of reversing anyway. So that's my logic, guys. Also, are you likely to deploy capital if you see XRP rise? Will you be thinking, oh, I'm going to miss the boat if XRP rallies from here and it goes up to like $1? Let's say it does have a retracement rally to like 97 cent. You're probably likely to buy there because you're not going to want to sit with your stable coin in your pocket if it does start to rip to all-time highs that you've been waiting for 3 or 4 years. So they're just the things to take into consideration. Not saying they are or aren't going to happen, but definitely think about all those sorts of things and don't be emotional about what's happening right now. Just think about how you'll feel in the future if you do or don't take the opportunities that you're being offered now. That's basically what I'm going to finish with there. One little clip from the BIS. I don't know if this video is getting too long. I've been chatting for a long time right now. But let's just quickly listen to BIS. We've got about 2 or 3 minutes to listen to. We'll quickly sum up what they're saying, then I'll leave this video here. I'm sorry for the long rambling video. Just thought it was time that I did express some of my feelings to you guys. Right, we'll listen to what the BIS is saying. By the way, this is alpha, guys. No one else is showing you this info. It's 1,191 views. This video came out yesterday, so you know where to find the good content.
Now, starting from this solid and trusted base, we envisage a superior digital representation of central bank money available to banks and payment providers through wholesale CBDCs, wholesale central bank digital currencies, operating in permissioned distributed ledger technology platforms. And what we argue is that this would enable most of the functionality.
So straight away, they're talking about permissioned CBDCs, permissioned DLT for CBDCs. Not saying anything. Not saying it is, not saying it isn't, but the private ledger for XRP. Distributed ledger technology on a permissioned basis.
Most of the functionalities that crypto and stablecoins offer today, for example, the ability to program payments and transfers according to certain conditions, and also to combine different operations into one bundle. Another capability we discuss is tokenization, which is the creation of a digital representation of money or deposits or securities or even real assets such as houses. The metaphor that we introduce for the future monetary system is that of a tree. The solid trunk of the tree is the central bank and central bank money.
So he's talking about the tokenization of everything. I keep talking about this, guys. That is coming. And like that's coming, like I could bet almost everything on that, because what better way to just display an asset than have it in a tokenized format that it can't be like edited, changed. You cut out loads of middlemen, you cut out a lot of problems. All it is doing is basically getting everything we've got in the real world today and just banging it on the on a computer. We basically do that anyway, but we just haven't quite caught up in finance, and this is why crypto is going to be about. This is why he's talking about what he is, and he's talking about in terms of CBDCs and tokenized assets, so stocks, gold, housing, etc. But let's see what he says here, because I think this part is very, very interesting.
And the tree supports a rich and vibrant ecosystem of services provided by private sector institutions that build on top. And in this tree, the ecosystem is rooted, figuratively speaking, in the settlement on the central bank's balance sheet itself. Now, if we...
So he's using the analogy of a tree. He said the tree is being rooted and into a central bank. So he's basically saying all these different assets, like your tokenized stocks I was just talking about, your cash, your CBDCs, retail, wholesale, like commodities, all this sort of stuff at the root, the branch of the tree, and the trunk of the tree and the roots go into the central bank.
We think of the individual, if an individual monetary system is a tree, then we can zoom out. When we zoom out, we can see the canopy of the forest where the tree branches meet. And the canopy embodies an important additional component of the future monetary system in the form of multi-CBDC platforms, multi-central bank digital currency platforms, in which CBDCs from several central banks can all transact on the same platform.
That is gold. That is gold. That is the most important thing. If you're going to take anything away from this today, take this away. He's just said that if we use the analogy of a tree, we talk about the branches as the different aspects of what's going on. So the commodities, the tokenized commodities, tokenized housing, stocks, cash, retail CBDCs, wholesale CBDCs, the root and the branch, the trunk and the roots of the tree and the central bank. Then if you take a step back and zoom out, you can see all the trees and all the different central banks running on the same protocol. That is what he's literally just said. Let's just listen to him repeat that, because this is so important, guys. If you need to listen to this one part.
Where the tree branches meet. And the canopy embodies an important additional component of the future monetary system in the form of multi-CBDC platforms, multi-central bank digital currency platforms, in which CBDCs from several central banks can all transact on the same platform, again, using DLT.
CBDCs from multi-different banks will all interact on the same platform, again, DLT. What's DLT? What's the first example we've got? It's the XRP ledger. I'm not saying this is going to be on XRP. I'm not. But I am saying that's where we've seen a lot of testing with the BIS, World Economic Forum, Bank of England. Take your flipping pick, guys. You might think I'm crazy, whatever, but just please listen to what they're saying and make your own mind up. Don't just listen to Fudsters online.
The chapter explained in detail how this new architecture works.
And that's about it, guys, for me today. I think that's super important. Like, that clip blows my mind. Like, it's the second or third time I've watched it today, and I just keep taking more information in from it. I definitely recommend checking it out. Like, after this, they start answering questions. I haven't watched it any further than this. But yeah, let me know what you guys think in the comments. If you enjoyed the video, please let me know. Peace up, A-Town down. I'll see you on the next one.